Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are actually doing a second part of our previous video. So if you haven't already, make sure to go back one video and watch the first part so you can continue the conversation in this video. And without further ado, let's just jump right into it. Now, with that being said, there are definitely investment risks if you decide to keep investing or if you decide to usher in and initiate an investment. The number one thing hurting Sofi Technologies, in my opinion, as well as other growth stocks besides macroeconomic factors, is their stock-based compensation. This dilutes and waters down shareholders, thus lowering the overall stock price. And another thing would be that Sofi Technologies is increasing their net losses significantly. However, I anticipate that both of these things will teeter off over the long term, because this is very normal for growth companies to experience both of these negatives, at least for a short amount of time. Now, with that being said, I do want to put this into perspective. Sofi did double their net losses from around $225 million in 2020 to about $485 million for the year of 2021. So this is definitely pretty ugly for Sofi Technologies. And people who hate Sofi or are shorting Sofi clearly are taking advantage of their stock-based compensation and their net losses. For this year, the stock-based compensation is supposed to take up around $350 million. So these are real risks, and I want you to be aware of these risks so you can make a wise investment decision. However, this is very normal for growth stocks to experience both of these things. However, if you believe in the company's fundamentals, and if you don't believe that the company is going to go broke, which I don't think they are, there is very good long-term potential for this company, and to me, it's a compelling buying opportunity as long as you are practicing good risk management and you are not already overexposed to one single company, because that would just be bad risk management. So with that being said, we need to move on. Is it worth the current risk to reward ratio, and will Sofi Technologies be profitable in the future? Well, I have a whole video dedicated to this, and yes, the current projections does say that Sofi Technologies will be a profitable company as soon as 2024. The company is literally participating in a trillion with a T dollar market. Their TAM, or total addressable market, is very expansive, and they are growing very aggressively, like the CEO said, quarter over quarter. Based off of current fundamentals and financials, I am very pleased with Sofi's quarter over quarter and year over year increases for their revenues as well as their EBITDA. They also grew their membership by almost 40% throughout the year of 2021, and although the student loan moratorium was set to expire originally long ago, Sofi Technologies is getting on rather fine without this revenue channel, and eventually when the student loan moratorium does end and expire, it's going to act as a fantastic catalyst that I believe will cause the stock price to absolutely explode. Now let's talk about the current valuation compared to some of their competition. Right now, if you look on this chart, we can see that Sofi Technologies outperforms the majority of other financial institutions that operate and are very close to Sofi Technologies. A couple of these would be Lemonade, Block, Affirm, Robinhood, Upstart, and Sofi Technologies. As you can see, Sofi is here in purple, and they are about middle of the road. However, if we look at more recent metrics, we can even see that Sofi Technologies actually outclasses other companies such as Affirm and Upstart. So with that being said, Sofi Technologies is trading at a discount compared to their other fintech competition, particularly if we hone in on Lemonade, Upstart, and Affirm, because they all carry price to sales ratios that are much higher than Sofi's. So if you are invested or have invested into Lemonade, Upstart, and Affirm, technically from a PS ratio standpoint, Sofi is a better buying opportunity and therefore less risky. But when looking at financial ratios, just like we did at the end of last video, we need to look at more than one ratio. We can't just look at one ratio and assume that this company is automatically better because they have a better PS ratio. But regardless, the demand for Sofi's services and technology as well as their products is going to be fantastic for a long-term buying opportunity in the overall SOFI stock. So we should definitely continue to practice good risk management before we throw in the towel for Sofi Technologies. The student loan moratorium will act as a fantastic catalyst when students end up resuming their payments on their student loans, and this is going to be very, very good for the overall SOFI stock price. Now, I actually want to back off and stop talking about Sofi's customers, particularly everyday customers such as you and me, and I want to talk about their business customers, their B2B or business-to-business customers. And if you didn't know, they acquired Galileo, and Galileo is a digital payments platform that targets small to medium-sized businesses, which makes up SoFi's enterprise sales. Galileo has been growing rapidly, and not many people are talking about this. They grew from around 60 million accounts to over 100 million accounts within just a single year. So not only is Sofi Technologies doing pretty well despite the student loan moratorium based off of everyday customers such as you and I, but their business-to-business customers and enterprises are doing absolutely fantastic. And because of this, Sofi Technologies plans to roll out even more financial services products to help differentiate themselves from other fintech companies. This is not only going to increase their overall competitiveness in the market, but it's also going to add even more revenue channels. And I really want to drive this point home. Is SoFi stock worth buying at the current stock price of around $6? I say yes. Why do I say that? The reason for this is because Sofi Technologies is a growth stock, and when we value a growth stock, we are basing its current stock price based off of its future net revenue potential, and SoFi has a fantastic future net revenue potential, and the reason how we know this is that SoFi is anticipated to grow top-of-the-line revenues by around 45% for the next few years. We even heard this in our first article from the CEO himself. So we're basing SoFi's current stock price based off of their future net revenue potential, which means that currently the stock price is actually trading at a slight discount. Now, if you're trying to pin their current stock price based on the revenues that they're bringing in now, yes, you could make an argument saying that the current stock price is expensive, but if we put it into perspective that this is a growth stock, it's actually a fantastic investment opportunity in my personal opinion. If you don't believe me, you can go and look at some of the ratios that we looked at the end of the last video. But despite SoFi being a market leader in the fintech space, and in my opinion, dominating this space as of right now, their competition is still growing. That is why they need to continuously add new financial products and obtain new customers and members. SoFi most certainly faces short-term risks, such as the student loan moratorium being extended again, which management believes will happen, their stock-based compensation, and they are not profitable right now. But SoFi seems to be a fantastic long-term buying opportunity due to its long-term revenue projections because their CAGR, or compounding annual growth rate for their revenues, is so high. Again, I've said this in multiple other videos. If you can find a company that is going to grow for over 5 years at over a 30% CAGR for their revenues, that company is absolutely on fire in a good way. That is absolutely amazing, and SoFi more than fits this bill. So although investors are selling the stock based off of the short-term implications, the long-term bullish price targets for SoFi Technologies are completely intact. So really the question is, how long are you willing to hold SoFi Technologies before you start seeing some good profits? Because right now, the stock price is substantially discounted. They're trading at around a 75% discount from their all-time highs. They have experienced around a 56% drop from the start of the year of 2022 and a 37% drop from $11. So with all of that being said, let's determine when SoFi Technologies will bounce back, because right now growth stocks in general, not just SoFi Technologies, are being hit very hard. Two great examples of this is Kathy Wood of ARK Invest's ARKK fund, which is a conglomeration of a lot of different growth stocks, and that has absolutely plummeted, even though some of the companies that ARK holds I actually really like. And even another growth company such as Netflix has fallen around 50%, and then recently it fell another 35% in a single session because their overall subscribers were less than anticipated. So this is not just a problem for SoFi Technologies, this is a macroeconomic problem. Now, I do want to read this straight from the article, and I think this is going to be very good for many investors to hear. And this is going to tell us when SoFi Technologies could potentially rebound. And in our first article, it's when either a catalyst or news comes out about it and it breaks above around $7.40. But this author, I think, explains this much better because there are multiple reasons why the stock can have a reversal. For instance, and I quote, "Classic signs of a bottom," which means the lowest that the stock price is going to go before it actually rebounds and starts to surge again, include slowing momentum, double bottoms, higher pivot lows, or an inverted head and shoulders, and most importantly, a break above resistance, and the article that we looked at before, the resistance was around $7.40, so complete and confirm the downtrend is dead before investing. He goes on to say, if you don't want to fuss with the pattern recognition, simply wait for a close above the 50-day moving average, and overall, that is fantastic. These are definitely all the reasons which could cause SoFi stock to to surge despite its current downtrend. So with all of this news, what can we actually learn and take away from this? Well, we know that fundamentally SoFi is a good company. We know that their current stock price is not a good reflection of how the company is actually operating right now, and we know eventually these short-term negative news developments will fade away, and the long-term still is very bullish, and it looks good for Sofi Technologies. So with that being said, remember to go and smash that like button right now, comment your thoughts down below about the SoFi stock, subscribe if you are new, and I'll see you in the next YT video.